So recently we've had a lot of our clients ask us about what do we define as a martingale strategy. Now for example, we've had a client reach out to us asking us if he takes a trade at one lot and he takes a loss, and then he takes another trade at two loss, take another loss, and then takes another trade at three lots and then takes a loss. Well, we count that as a martingale strategy. So I think the main thing this client was asking is, if I increase my lot sizes as I take losses, will this then count as a martingale, and will our risk team at Rhodium FX flag it? So the answer to that is, it depends on a couple of things. So let me take you guys through sort of what the martingale strategy really is, and then I can show you guys sort of what the risk team at Rhodium FX looks for specifically for this martingale strategy, to help clear things out a little bit. So the first thing we have, for example, is, like I said earlier, this client took a trade at one lot and then two lots and three lots. So to really understand what a martingale strategy is, what a trader essentially does is, let's say, for example, they took a trade where the first loss of that trade was, for example, $1,000. Now what they do next to try and recover this $1,000 and add some profit, they'll risk an extra $2,000 on their next trade. All right, so now let's say this trade took a loss, and now they want to recover again this $3,000 that they've lost. Now, in hindsight, this might sound like a good idea to increase your risk, to try and cover those previous losses you have, but this is sort of on the borderline of kind of revenge trading, but adding it to as a strategy. So let's say now, for another step, the trader now risks $4,000 and hoping to make back this previous $3,000 plus $1,000 profit. But now the problem is, now they have lost this $4,000 plus this extra $3,000, which is now accumulated to a total of $7,000 in losses, which ideally is, not a great situation for this trader, because every single time you take a losing trade, you essentially up your risk, hoping that that next trade will then take out those losses. But the thing about trading is, we have no idea whether we follow our strategy or not. We have no idea whether the next trade we're taking is going to be a winning trade or a losing trade. So for us to decide as a trader to increase my risk or decrease my risk because I feel maybe this next trade will be better, or this next trade might not be as good, is really kind of skewing your odds and removing that the odds in your favor that your strategy is supposed to be giving to you. So now that you guys know this, I'll give you guys another example of the martingale strategy. So let's say a standard risk, for example, is 1% per trade, and now they take a loss and they want to increase their risk to 2% per trade. Obviously, your account's going to go down, so the dollar value will go down with the percentage, but it's more or less the same idea. And now the trader took another loss, and now they're going to double that risk or increase that risk to, let's say, 3% for this example, 3% per trade. And now they take another loss, and they're going to increase their risk to 4% per trade until they essentially get a winning trade that's going to remove all of these. But again, the same problem occurs with this increasing your percentage risk compared to the dollar value of your trade. Now, every single time you take a loss, your loss gets bigger and bigger and bigger. You need to make a bigger and bigger and bigger trade for you to take out those previous losses. Now, this gives you a whole other problems with psychology, and you're going to start looking for trades that maybe don't match your strategy as well, but because it's going to be a bigger, badder trade, essentially, it's going to, you're not looking for a trade that suits your strategy, but rather looking for the next big winning trade, which is really not what a successful trader should be doing. Okay, so this is sort of what our team looks for in a martingale strategy. Now, regarding the lot sizes, a lot size, in my opinion, does not really have, well, depending on how you, where you put your lot size, where you put your stop loss, how big your stop loss is. But realistically, a lot size, increasing your lot size per trade when you take a loss, might necessarily not count as a martingale strategy. And I'll take you guys through that, sort of an example of what our team might not see as they will not see as a martingale strategy. So let's say, for example, we've now had a trader who took a trade, and our team knows this trader. That's what our challenge phases are for. It's for our risk team to assess your trading, to see sort of what sort of trader you are, to categorize you into a category, to figure out your psychology behind your trading, to understand your trading strategy. Sometimes our team might even reach out to you to understand your trading strategy, just to help you a bit better. We love to stay in communication with our clients and to understand our clients a bit better. We do all these sorts of things to have a really good relationship with them. But let's say, for example, we know that this trader generally risks 1% per trade. Now, let's say the trader we'll call him Bob. So Bob took a loss on a one lot trade, right? Now he sees another opportunity and he wants to take another trade, but in this instance, because his stop loss might be a bit tighter or for whatever reason, he's going to take a two lot trade on that next trade. So he's now doubled his risk essentially. And now let's say he loses this two lot trade, and now he moves on to a third trade, and he wants to take this third trade with, let's say, we'll keep it small increments, a three lot trade. So a lot of people have been asking this specific question: does this right over here count as a martingale strategy? Will Rhodium FX flag my account for this? And I'll give you the reason why we necessarily might not flag it and how you can completely avoid getting flagged, even though your lot sizes do increase. So again, like I said, at Rhodium FX, we want to look for consistency. We always want to look for consistency, whether it's with your winners or with your losers. So if a client consistently, takes losses that are, let's say, 1%, that's a good sign, because as a trader, you need to learn to limit and control your losses. So if our team sees, even if you take a couple of losses in a row, we generally don't care about this. It doesn't bother us, because we know trading, part of the game is taking losses. So this trader, Bob, right here, took a one lot trade, and he ended up losing, let's say, 1.5% on this trade over here. Right, and now what happens is he gets another entry signal from whatever pair he's trading, let's say gold, for example, but this time his stop loss can be a lot tighter. So maybe the resistance that the market's taking it, let's say selling the market, and there's a resistance, and he wants to put a stop loss above that resistance, but it's much tighter than the previous area. So now he's able to still risk that 1.5%, but unable to keep that 1.5% risk consistent. He needs to risk a bigger lot size. But the matter of fact is, Bob has still risked 1.5% on his trade. And the same thing happens now for the third trade. If Bob took a third trade and his lot size goes from 2 lots to 3 lots, or even 2 lots to 5 lots, for example, but he still stays within his general 1.5 risk that we see with him every single time he trades, our team will not flag this as a martingale strategy, right? Like I said, because what we look for is consistency. If a client consistently sticks to their rules and they have a consistent risk strategy, we know that sometimes lots will fluctuate, and it's a normal thing. Lots will fluctuate depending on how tight your stop loss is, how big the stop loss is, or what pair you're trading. For example, gold obviously has a much higher value per move, so your lot size might be 0.8. If you trade gold, then maybe you've got a GBP JPY, which has got a much lower value per movement, you might trade a 3 lot on GBP JPY, right? So we generally don't really care about this. The main thing our team is looking for is your actual set risk that you're taking increasing, right? So for example, if you go from $1,000 per trade, you take a loss, then you take another risk of $2,000 per trade, take a loss, $3,000 take a loss, $4,000 take a loss, right? Or percentage 1 up to 2 to 3, incrementing your losses. This is generally a bad practice for traders. So this is something specifically our team is going to look for, and I would recommend you avoiding as well. Now, another hint that I can give you guys for your trading is I would always recommend you look at taking a percentage risk on your trade. I personally do this as well. Ever since I started, seeing some good consistency, I've been taking percentage risks in my trades. The reason being, if I continuously stick to a 1% or 2% risk per trade, personally, I like to never go above 1%. So my risk is always at 1%. So if my account goes up, my percentage stays at 1, but the dollar value per risk goes up with my account. If my account goes down, I still stick that 1% trade. My dollar value per account is per that account. As my account goes down with my account as well. So I have a good consistency, and also the risk allows you to quickly scale your account. But when you do start taking losses in your trades, it allows you to quickly descale those losses and last a lot longer. Now remember, in trading, your biggest sort of goal in trading is to preserve capital. It's funny, a lot of people think that making money with trading is, the big target, although yes, that's what your target is. But your biggest thing you need to focus on in trading is preserving your capital, because without your capital, you cannot trade. So hopefully that video helped you guys. Hopefully it helps you understand what our team looks for in Martingale and how to avoid it. And really, hopefully that answers the questions. If you guys do have any other questions about our rules or about Rhodium FX, please feel free to comment it in the comments down below. If you're on a Discord, feel free to reach out there and let us know. We want to hear back from you guys. That's, Rhodium FX wouldn't exist without our clients. So we take your considerations and your thoughts and your questions into a high regard. So if there is anything, please do let us know, and we'll be happy to answer them in one way or another. Hopefully these videos do help, guys. But thank you so much from everyone here at Rhodium FX. Stay tuned, trade safe.